Hi, I'm Ed Sakota. In response to numerous requests over the years to reveal the inner workings of my trend trading system, I hereby take great pleasure in presenting its essential elements for your financial edification. Joining me today are several members from the Northern Nevada Bluegrass Association. We gather to play benefits for local area hospitals. If you are currently in a clinic as a recovering marketaholic, or even if you have a mild case of marketitis, this tune might put you on the road to recovery. In any event, pull up a chair, lean into your monitor, and lend us an ear. We hope that you enjoy the show. You get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine. Now what do we do when we catch a trend, honey? What do we do when we catch a trend, baby? Well, what do we do when we catch a trend? We ride that trend right to the end, honey trader, baby mine. So you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine.
Well, what do we do when we show a loss, honey? What do we do when we show a loss, babe? What do we do when we show a loss? We give that daggone loss a toss, honey, baby mine.
Well, you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine.
Money and we sleep at night, honey, baby mine. So
you get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, baby. You get a whipping, I'll get a saw. One good trend pays for 'em all, honey trader, baby mine.
Well, what do we do when the price breaks through, honey? What do we do when the price breaks through, baby? What do we do when the price breaks through? Our sauce or Renzo's nothing to do, honey, baby mine.
So you get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, baby. You get a whipping, I'll get a saw. One good trend pays for 'em all, honey trader, baby mine.
What do you do when the drawdown comes, honey? What do you do when it gets real big, babe? What do you do when it's even bigger? We stick to the plan and pull the trigger, honey trader, baby mine. Well, you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine.
You're gonna love the double bass here, folks. My favorite instrument.
Now What do we do with a hot news flash, honey? What do we do with a hot news flash, babe? What do we do with a hot news flash? We stash that flash right in the trash, honey trader, baby mine. So you get a whip and I'll get a saw, honey. You get a whip and I'll get a saw, baby. You get a whip and I'll get a saw. One good trend pays for them all, honey trader, baby mine. Good trend pays for them all, honey trader, baby mine.
You gotta love it, folks. Welcome to the live stream. That's Ed Sakota and the Trading Tribe and their 6-step trading program, which you would do well to listen to, watch again. I play it quite often, and if you follow those 6 steps, you should be okay. I've still got Harley here with me, so please ignore any intrusions by a very large and whiny Dachshund, our new rescue dog. In that song, there are a couple of interesting points that I'd just like to emphasize before we start. And one is, you get a whip and I get a saw, the main chorus of the song. You get a whip and I get a saw, but one good trend pays for them all. If you're in my private group, you'll notice that sometimes we have to hedge, unhedge, hedge, unhedge, at certain levels. We saw it on natural gas recently. We'll talk about that shortly. And that process of hedging and unhedging at market inflection or turning points is a mechanism or a way to avoid the whipsaw that you often get at those big spiky turny places. So really interesting. The other point, the last point in that song is, what do you do with a hot news flash and the retort in the call and call and retort type song? What do you do with a hot news flash? You stick that news right in the trash. In other words, you ignore the news, and that might go against everything that most of you thought over the years. That news is important. There are people that trade the news only, but technical traders generally, mostly, and quite often ignore what's going on in the news. Welcome to the live stream, everyone, and I'm very pleased to have you here. I'm going to give away 10 free memberships right now. And for the rest of you who don't get one, I don't choose who YouTube allocates this to. So if you don't get one, why not just click the join button right below this video and join for $1 a month? And then you'll get all of the members perks as well as all the free stuff, of course. And you'll get access to all the members perks, including members only live streams and various other things, which you can read about on the webpage when you click the join button. So here we are. And let's look at the markets quickly. I really want to make this more of a question and answer session today. And I want to use these live streams to not just do a monologue from my side, but to invite questions that we could discuss seriously. And some of them could be quite detailed. So if you've got a serious, nagging and important question, whether you think it's silly or relevant, or whether you might think it might make you look a little foolish if you ask it, in other words. But if you do feel that way, don't worry about it. Most people will think the same things, and probably most people are asking the same questions. All right, so I'm going to leave all these chats up for the moment. Good day, Brian. Welcome to you. And a few appreciating the song, the Whipsaw song at the beginning. Good day, Ocean, and Andreas Graf, loving the music. I'll say hello to Harley for you, Brian. Thank you very much. Good morning, VB. Let's go. Yeah, big day today, last day of the week, and it's Friday. Will it be Free Fall Friday? We had a Free Fall Friday on the 4th of April. If you remember, that's when, I think it was the day, was it the day after or 2 days after the Trump Liberation Day, and the market crashed. We had a couple actually on 2 subsequent Fridays, and will today be one of those? Well, that's the question we're all going to ask. Are we going to see new all-time highs in general is the big question, or are we in a bear market rally? A dead cat bounce, if you will, depending on how you want to call it. I want to go through the charts very quickly, and then I'll get to the questions. Just greet a few more people that have just come in. Good day, Junaid. Always nice to see you here. And Blue Jail from London, my hometown where I was born in Chalk Farm. Blue Jail, very close to Chalk Farm anyway, which you might know if you're a Londoner. Good day, Steve. Nice to see you, and good day to everyone. And Steve, M1N1, hardly managed to catch you these days. Glad you have today. Yeah, so Steve, I'm going to be doing a lot more videos and live streams, and this is one of them. And I'll be doing live streams for members and for the public. So the idea is to try and flesh out some of the things that we want to talk about, that we want to analyze, that we want to detail in the markets in more detail in the live streams. It's very difficult to do it in a preset, pre-recorded video. And also, I don't know what people want to know about. Don't know what questions they're asking. So it's good to see you here, Brian. Sorry, Steve. Brian Perry, do you see a large head and shoulders forming on natural gas, January through March to May, that might conflict with fundamental support? Yeah, let's have a look at that, Brian. That's a very good point, actually. It's something that I have in mind and I've observed. And EGT, good day to you too. I want the community to know that I've just been a father. Beautiful boy called Daniel. Well done, EGT. Wow, that's amazing. I think we're going to leave this one up forever throughout the chat. What a fantastic, fantastic thing. Well done to you. And here's a lot of love and super chatting back from me to you. I can't send you money, but I'd like to buy your, well, we don't know. It's a boy. We'd like to buy Daniel a new cricket bat one day. So maybe when he's a bit bigger or something like that. So congratulations. Yeah. Good day, Eduardo. Thank you very much. I appreciate your compliment there. I don't think I'm the best, but I think I'm okay. Good day, Eve from Australia. Another place where I have spent quite a lot of time, Eve, in Australia. I worked and lived on the Sunshine Coast in Australia in a place called Mooloolaba near Budrum, near Maroochydore, a little bit south from Cairns, up that way in that area. About an hour north of Brisbane. So I suppose in between Brisbane and Cairns, roughly halfway, maybe closer to Brisbane. But nice to see you here. Congratulations all coming in for young Daniel, who's brand new today. Was it today? EGT, was Daniel born today? Wow, what a fantastic day. And lots of congratulations coming for young Daniel. And of course, for the father and the mother. Congrats, EGT, from Junaid and Ocean and Germany. Good day, Naruto from Germany. And Kevin from the UK. 2 days ago. Fantastic. Awesome stuff. Well done, EGT. I'm going to give away 10 free memberships right now. Let's get this out of the way. I've actually got to buy them because my membership gifting has now expired for the month. You can only give 10 away every month, but I can buy them. And YouTube, with its unending grace and generosity, will give me 60% of that back. All right, so there we go. Memberships are gifted, and YouTube will allocate those as YouTube wishes to do so. And if you got one, well done. And please, when you get your membership, just you'll get a reminder from YouTube at the end of the month, after 30 days. And just it'll ask you if you want to renew it for $1 a month. And I'd really appreciate it, seeing as I've got you started with the first $1, if you could renew that and just remain a member and enjoy the perks. Let's go across to the charts, folks. I'll get to some of the other questions. Primrose Hill. Yeah, beautiful. Wonderful, Blue Jail. And you'd love a membership. Fariba, I hope you got one. I don't know who got them. And I can't see who got them, but I don't allocate them. YouTube does that. Let's go to the charts, folks. Yeah, so those quickly, those 10 free memberships were allocated automatically by Google, it's YouTube, Google. And if you got one, congratulations. All right, now let's go to the charts. So, and I'm going to start with currencies as usual. And because I've done this already this morning, and I'm hoping that you've already watched this morning's video, which was an overview of all the things that we're looking at. Let me just get rid of that sign, which is annoying, shouldn't be there. Okay, that's gone. So I've done an overview of what we're looking at. We've talked about currencies being short generally in mind, short the dollar or the Dixie, and therefore long the euro, long the pound, short the dollar yen. We didn't manage to get into that trade. You can see where my arrow is over here. And we didn't manage to get up there towards the 100 and the 200 period moving averages. We did get above the first resistance, and I thought we were going to get there. We didn't get it. So we didn't get that trade, but we are short on the euro Japanese yen. That's moving down nicely. I covered all of this in the previous video. We're now out of our dollar Swiss franc trade. We have no trades on there. So the only two trades we have on currencies are long the euro, target 1.18, and then probably 1.2. As we see the dollar index, we're trading at around about 100 now, 100.8. If the dollar index drops down to 93, and I think that's what's most likely, I'll show you that, and I'll show you why. And I hope I can show you why. There we go. So this is the weekly chart on the dollar index. See the big clear out at the top there? We saw a similar thing on the euro, a clear out down through the bottom. And so that's a fake breakout through the top of the range. We didn't even get to the top of that part there. And then we failed down through the Dixie Moab, the major support really, at the just below the parity level of 100. And that's the sort of parity resting level. Now, I think we could get down here into this order block and the lower 200 period Bollinger Band. That's around about 93. It's actually creeping up a little bit. The Bollinger Band's moving higher, but I've drawn that blob in there. I had that blob drawn in there for about 2 months now. And we may have to move it across to the right-hand side because we're being a little slow here on the dollar index. But that's my target. And that's down, let's say 94 now, actually. So we're currently trading at 100. That's 600 pips below us on the dollar index. And I think that's where we're headed. And the reason I think this is because we've seen this pattern before in various market sell-offs. We've seen it before with tariffs, and this particular combination of events being in a very, very overbought, highly priced market with the tariffs coming in, dollar very highly priced. It's come down a bit now. And we often see all the markets come down, including the dollar, including gold, including the stock indices, all at the same time. Not quite as dramatically as each other because gold eventually finds a footing. This is, of course, if we're in a bear market. Gold finds a footing and then stabilizes. The markets continue to go down and the dollar finds footing eventually at some point as well. Now, I think we'll find the dollar footing lower than where we are currently. But when we get down there, if we get down there, and I think we will, we should turn around and start moving back towards 100. So that's the kind of gameplay on the dollar index. And I'm trading it with the euro only for now. I'm not getting into the pound or the dollar yen, because we missed the dollar yen trade. And I'm not as convinced as I could be. So I'm not also going to buy the British pound, but we are short on the cross, on the euro yen cross. The euro yen, I know, once again, I covered all of this in this morning's video, so I don't want to spend a lot of time here. But target down there at 144, a purely technical play. Move up, flagpole, flag, next flagpole, down, equivalent to the same length as the original flagpole. So that's all we have on currencies. And generally, overall picture, I think dollar weakness will creep in. Now, let's go to stocks. Are we at a, once again, there's so much to cover here, but we're at this level. We've broken up through, let's start, and really it's easy. It's best to focus on one particular index. The S&P will trade slightly differently. It's a completely different mix. There is some overlap, but they will trade differently, and but more or less the same. So I'm going to focus in on the NASDAQ, and it's the one I prefer to trade more than the S&P because we get more daily moves. It tends to be more, in my opinion, more technically oriented to my swing trading style, and it's a much broader range, of course, as well. So it's kind of easier to see. But we are at this level. We've broken and gapped above the 200 period moving average. We've run out of momentum. I posted this up on X and my videos. Big bullish candle gapping up over the 200, leaving a gap behind there, and leaving a gap there, and leaving a gap down way much lower than where we are at the moment. 2 gaps below us. But the momentum has dried up. Big bullish candle, half the size the next candle, half again the next candle, followed by a star doji, and that's where we are today. That's a topping formation, folks. Today doesn't look particularly toppish because we are moving up slightly, but that's what it is. And that's either going to be negated today and we'll move up and we'll have to hedge or something like that. We'll decide as this market plays along. And we've got about 45 minutes before the markets open. If it moves down, my targets are the 2 gaps, basically. 200 period moving average down here. Let me just show you quickly. There's the 200, the purple line, and the gap. That's the first target. That should be easily reached if we move down. The next target is the next gap down here and just below that Fibonacci level over here. So I think if we get there, that would be about 78.6% from the top. And if we don't turn around there and move on higher, then we should see much lower levels on the NASDAQ. So for now, I'm short. I like the topping formation. I like the topping pattern on the S&P. We haven't exceeded yesterday's highs. And I'm also short on the German 30. Once again, I like this pattern very much. And we're also very close to the top of this very long-term weekly channel. Let's switch to the week chart. And there you can see one of the most beautiful channels you'll ever see on any chart. It's almost perfect. Just that little overshoot there with Liberation Day. Once that overshoot retraced and corrected, we've moved all the way back to the top of the channel and a new all-time high. And we're now looking to sell. All right, so that's where we are. Look at the candle formation here at this level. Bear in mind, we haven't reached the top of the channel yet. So, ostensibly, we should still have to reach there, but we haven't. We don't always do that. Sometimes we miss the tops. I'll give you an example on the same chart. Let's go back to these areas here. Over there, you can see we missed the top. We touched the top there. We missed it on the second attempt, and we rolled down to the bottom of the channel. Now, where we are here, we hit the top. We've missed it on the second attempt. Again, are we going to roll down to the bottom of the channel and the 200 period moving average? Let's have a look at these candles a little more closely. I suppose you would call that a dragonfly doji, followed by a star doji, a full stop candle, followed by a bearish candle of a nondescript bearish candle, followed by a bullish candle yesterday, and today just tagging down a little bit. We still haven't exceeded the dragonfly doji high, and therefore the move up is, or let's say the top of the move up is not negated at this point, and we'll only be negating these tops if we close above. And bear in mind, a close, not a spike or a move, but a close above the highs of the NASDAQ, the S&P, and the German 30, only if we close above those. Now, there's a couple of names that we've been in. We were long Target, we were long MSTR, we were long Tesla, we were long Coinbase, and we were long Google. We've now exited all of those positions and taken profit on all of them, barring Google. I'm still long on Google. It's the only long position I have, bearing in mind I'm short on the NASDAQ, the S&P, and the German 30. Google has moved up a little bit today in pre-market and exceeded the top from 2 days ago, which is also a double top from a few days before that. So in pre-market, we've moved up to a new local recent swing high, and that bodes well for Google. If we see the same sort of thing on some of these other names, they're not showing it obviously just yet. MSTR is still down. Tesla up a wee bit today, but angling down. Coinbase up a wee bit today in pre-market, but angling down. And then Google up the most, actually. Target moved down quite a lot yesterday, gap down. We did manage to get some profit out of that as well. So are we going to be buying tech names, or are we going to be buying other names, staples and defense stocks like Target, and maybe things like Uber, maybe names like Walmart that we'll have a look at in time to come. Or the alternative to that is tech names. Are we going to be looking at the Mag 7 and some of the other names, including the Bitcoin trades, MSTR, Coinbase, and the other one was Mara. We were long on Mara as well. We took profit on that. It was a good trade as well. So Mara, Coinbase, MSTR, we'll look at those very closely, and perhaps some of the staples, and maybe some of the Mag 7. Now, the reason I'm actually a little bit more bullish on the Bitcoin stock names is because I still remain bullish on Bitcoin. Looking at the Bitcoin chart, although we're sort of under this trend line, just underneath it, we have actually closed above it on one occasion, maybe two, maybe three occasions. We're struggling just to break up through it. Once we do that, and I think we will, got lots of spikes down below us, and generally just angling up, making slightly higher progression here. And once we break up through there, we should start moving up towards this all-time high at 108. And at that point, I'll start adding more long tranches. I'm adding to Bitcoin as it goes up and not as it goes down. It's a good idea sometimes to trade and add your positions on when the market goes in your favor. Most traders only add positions on when the market goes against them. And of course, most of the time, that's when traders tend to blow their accounts, when they keep adding to a losing position. Try adding to a winning position, and you can see where I started off down here at the bottom on Bitcoin, and I've been adding ever since on rallies and not on dips, we haven't had any dips. So that's part of the reason for it. But all these rallies, every one of these green arrows, I've added more Bitcoin on. I've now got a decent chunk of Bitcoin, a really good, profitable, very profitable trade right now, and really profitable actually. And I'm now looking for this to move much higher. And I think we could get up to 150, 140 at least, 150, and maybe much more than that, maybe much beyond that. I don't know. I don't have any projections for it really, apart from roughly 140, 150. There's a couple of fib extensions further out at 160, 180. Maybe we'll get as far as that. I don't know. But I think this all looks pretty good. We're also long on Ethereum, and that was a magnificent move. Talking about, if you're looking for magnificent moves in the market, in something that's not a penny stock or a meme stock, then this is one great example. Busting up through all of these moving averages, all of these resistance levels, Fibonacci levels, etc., and getting all the way in basically one move from 1.8 to 2.6. So fantastic move on Ethereum. I'm allowing for dips back down to the moving averages down here, maybe at 2,100, which is the big breakout point. I'd love to get some more Ethereum at 2,100 precisely. And if we do get back down there, I'll be loading up some more on my Ethereum trade, looking for much higher levels. And I think we get up to 4,000 or 5,000. Same with the XRP. A little bit of a sell-off yesterday, actually, when all the other Bitcoin crypto stuff was moving up. Bit of a sell-off, but it's a choppy sort of market. It's immature and it's wild and it moves big percentages in a day. We have two long positions. Well, you can see on your chart, one at about $2, one at about 175, 170, somewhere in there. We're trading at 240 now, and I think we could get up to $5 on XRP. So once again, I'll be looking to add on XRP, Ethereum, Bitcoin, add on rallies, and I'll also be adding on Ethereum dips and perhaps even on XRP as well. Now, on gold, we've just gone short. We had got out of our short position earlier, actually yesterday, and we rallied back up, made a big piercing pattern candle, which is a big bullish reversal off the trend line, off the 50-period moving average. Remember, this was my first target, and I said I'll be taking some off here, but waiting for a move down to the next level at around about $3,000. So what's going to happen next? Well, we've already moved down. We're in some good profit already on this trade. We got in at around 32.30, I think. I can't remember the exact number, 32.30. We're currently trading at 31.70 something. So I think we're now heading down. I'm a little bit worried about yesterday's candle, of course. It's a big piercing pattern candle, which could still work out, and this could move up. Because of that, I've got a long position on silver. But I do like the way this is looking, and I'm quite surprised at the quick reversal to short that we got today. So until we break down below that low, folks, this is still a bear. Sorry, let me start again. Until we break down below this low, which is at 31.22, we are still in the grasp or the grip of this bullish reversal candle, which is a piercing pattern candle. Made a new low, closed up more than halfway through the previous body. So we have a bullish reversal candle pattern, but the market is moving short in our favor. And because of all of that, because of the risk involved, we are shorting a bull market and looking to get bullish again at some point in the near future, somewhere around the $3,000 level. But because of that, because it's a risky counter trend move, because we got that big bullish piercing pattern candle, I've also got a long position on silver, offsetting, partially hedging the short position on gold. And really that hasn't moved anywhere for about a week and a half, maybe 2 weeks. We went long, actually much longer. No, yeah, 2 weeks exactly. We went long on Friday, the 2nd of May, and we're now Friday, the 16th of May, and we're still more or less where we got into this trade. So pretty boring and slow. But I have to keep that on because we are in a counter trend trade with a bullish reversal candle pattern going on here. I still think gold is most likely to head down towards $3,000 and potentially lower. So hence those trades. So that's gold and silver. And then copper, we have no trades. Copper keeps on threatening to hold support here, but it is looking weak. We are making gradually lower lows, and the 20-period moving average on this day chart on copper is curling down on top of the price. The price has not been able to penetrate, not let alone close above, not even penetrate the 20-period moving average for 1, 2, 3, 4, 5, 6, 7 days now. That's 5 trading days in 1 week and 2 in the next, We haven't managed to get above the 20-period moving average. So it's starting to look bearish, and that means that we could see, it could be that Dr. Copper, who has his finger on the pulse of the markets, maybe it's a she, might see something that we haven't seen yet in the prices on the markets. And when I talk about the markets, I'm talking about the indices, NASDAQ, S&P, German 30. And copper is indicating to me that we've got weakness creeping in, and it's starting to build up quite significantly. So that's a good sign for the shorts on these markets if you're short. So going to energies, natural gas. Well, we're at this point now where we've taken partial profit. I covered this morning in this morning's video. So have a look at that. I'm not going to do too much detail in here because I did some detail in the video this morning. We try to get out of this pocket between the 20 and the 100-period moving average. That's why I took some profit there, partial profit, but we're still holding the rest. And we've moved down into the order block. This is a major and big support area between 3.3, 3.25 in this green block. And let's see what happens next. We've moved our stops to lock in about 20 cents of profit on this trade. So no matter what happens, we'll pick up another 20 cents profit here, shorting from all these shorts at the top here. So we've taken about half of our trade profit on trade profit off here. Actually, a little bit more than half. I think it was about 60%, something like that. So we took off, let's say, but I'm going to call it half for the purpose of this video. We took off half there, and we're now waiting to see what happens here. But I've moved my stop down to 351, and that's just above. And as time goes on, this is a 4-hour chart. As time goes in the next number of candles, this will move down, and 351 will be above that swing high. This tweezer top swing high, which is a very bearish candle pattern, by the way, against the 20-period moving average, encouraging us to stay short. But if we do get to 351, we'll be above that swing high and above the 200-period moving average. So that stop loss will lock in about 20 cents of profit. But it's not the best outcome, of course. I'd like this to move down further. My next target, if we do manage to move down, is the next order block, and big round number down at $3. It's a big swing level for natural gas overall over many, many years and decades, and it's an important level. So if we can get down there, and I'm going to get back to Brian's question earlier about the head and shoulders, and for that, maybe a massive one. I don't know, Brian, or were you talking? I think maybe you're talking something like that. Yeah, we can go to the day chart for this. I think you're talking about the slightly skewed head and shoulders here. So I can draw that in for you. Yeah, look, head and shoulders are my least, let me see if I can get it. I need to make this point. Don't let me forget. Patterns, where's head and shoulders? So I'm going to start down at here, the 200-period moving average, move up to that swing high, left shoulder, down to the shoulder line, up to the head, back down to the shoulder line, back up to where we are right now. Notice that we haven't got anywhere near the left-hand shoulder, which means we could still get up there and still form this head and shoulders. That shoulder is very, very close to the head. So it would be a lopsided head and shoulders, and we'd have to draw a trend line across the top. But I'm going to put it in where we are now and assume that we've reached the top, and then we'll go back down to where we started with this head and shoulders, back down to the target. That could be all the way down to $2, believe it or not. And I think that's well worth pointing out, Brian. My target is $3 and maybe $2.50 or 60, somewhere in these moving averages down here, probably $2.50, which is the top of this downward sloping trend line. I like that very much. There's also a trend line coming up from the bottom, which we'll reach earlier. But my targets are generally down in this region, starting at 320, 325, then $3, and then maybe we can get some moves down in here. But drawing that head and shoulders pattern, we could get all the way back down to close to $2. It is a bit skew, and we'd have to draw a line across something like this and see if that looks okay. What I like to do if we've got a skew head and shoulders like this is I like to draw a line across the tops and then draw a channel line along the bottom, just clone the top line because it is skew, and then just draw it along the swing lows somewhere and see if we can get something of use or helpful at the bottom. And you can see it actually aligns quite well with some of these other trend lines that I've got going on down here. So yeah, maybe a skewed head and shoulders. The target could actually be even lower than $2 if it's kind of skewed down. Anyway, be that as it may, that's a long way out. But for now, we're short. And Go back to the 4-hour chart, but we may be bouncing off here, and we're watching this very closely. Current candle, the next 4-hour candle is at 4 o'clock my time, and that's in 1 hour's time. So in 1 hour's time from now, I'll be reassessing what we're doing with natural gas. Ideally, we'll move down to here, but if this does bounce up, we'll get stopped out at $3.51, and that will lock in another 20 cents of profit that we will put into the bank very nicely and very happily. But it won't be the best outcome. I'd prefer to get a move at least down to the bottom of this order block, and then hopefully down to $3. And as Brian pointed out, if this head and shoulders works out, we could get even lower down to this level. My general idea, though, however, folks, and I'll just finish off natural gas with this, is that natural gas has now moved in to a new range between roughly $3 and $4. I'm a little bit more bullish, actually significantly more bullish than I was a year ago. And I think the advent of AI data centers, privatized electricity consuming natural gas, LNG exports, potential failure of green energy, and Brian over at Energy Rogue, who's here with us, often points out, and quite correctly, that green energy renewables seem to be taking up a lot of the slack. I don't know if that's true or not. I don't know the full science behind it, between renewables, the cost of them, the maintenance of them, the viability of them in dramatically fluctuating demand systems, and then huge base level drawdown from natural gas and energy, just baseline, which has got to be met consistently day after day after day. And right now, we're seeing that baseline, and Brian and Bill over at Energy Rogue showed me some charts that the baseline for natural gas is moving up, and we're getting more into that situation where small changes in, supply and demand can affect, with an A, big changes in the price of natural gas and other energy contributors, because we're now so close into that fluctuation zone that the base level is basically filled up, and we're just moving within that fluctuation zone at the top. Brian explained it a lot better when he did his videos. And if you do like watching natural gas videos, I'd highly recommend you go to Brian and Bill's YouTube channel. It's called Energy Rogue, and I might type this up here. And if you want this sort of information, which is invaluable, you can get it over there. And they do videos on YouTube quite regularly, and they're very, very interesting. I was at the last video. Actually, I attend most of their videos. So there we go. So that's all about natural gas. So generally, I think we're in this new range between $3 and $4 because of increased base load demand for electricity. And we live in a world where electricity is going to be consumed more and more and more. I don't even think it's linear anymore. I think we've got an exponential demand curve for electricity, and I think that's going to continue. That's just my hunch. I could be completely wrong. Maybe we won't need any electricity in 10 years' time. Maybe the world will be destroyed by a meteor or by a nuclear exchange between India and Pakistan. Who knows? But for now, I think we're seeing an increase in natural gas prices because of the increase in electricity demand and also take-up, or potential take-up. Whether it's true or not, again, remains to be seen. But by Europe of liquefied natural gas, having recently shunned the Russians. I don't know if that's true, though. That's probably not true. I'm sure they're getting Russian energy all the time. So there you go. You can't trust anything you read about. But that's natural gas and WTI. So I think we're in this new upper range, $3 and $4. So I'm seeing $3 as the low point, the base level for natural gas, $4 as the upper extreme, barring extraneous weird happenings. Of course, we could go to $10, but generally $3 to $4. Now, I don't think that Brian and Bill over at NG Rogue completely agree with me, and they did. Brian has pointed out their head and shoulders pattern, which could take us down to $2. He might be right. I don't know. But, we never really know anything. We take our best guesses and estimates. We try and do the calculations. We do the analysis. We read the data. We draw on our experience. We think about what happened in the past. We look at previous things, previous patterns, try and make sense of it all. But we often get it wrong. And not only do I get it wrong a lot, at least 30% of the time, probably more. I think probably more like 40% of the time. But through clever trading, hedging, I'm able to get out of many of those losing situations quite safely and without a loss. So that's where we are. Yeah, so natural gas. Now let's have a look at this chart. I think I got distracted there. We're also long on the South African rand, dollar South African rand. Now, South Africa is an interesting place right now. We've got people that have been invited to the US by Donald Trump as refugees or asylum seekers, depending on your definitions. There's all sorts of very specific definitions about the two, which we won't go into now. But generally, there could be hundreds of thousands of people with skills leaving this country. Also, Donald Trump has been, and Elon Musk and the ambassador, who's also the US ambassador to South Africa, who's also was born in South Africa, I think. All of them are fighting with Cyril Ramaphosa, and Cyril has gathered some cohorts. The Americans have gathered some cohorts, and not only have they taken away all financial assistance to South Africa, once again, I don't know if that can be believed or not, but they've cut away, but basically placed huge tariffs on this country and removed USAID assistance, including AIDS assistance, not to be confused with the USAID. So all sorts of bad news. And we all through this, we see, and not only that, we've got electricity cuts going on again. We've got violence. We've got just a completely collapsed infrastructure in South Africa. And yet we saw the rand in the last, since the beginning of April, strengthen from 20 rands to the dollar to 18 rands to the dollar, a 10% improvement in the value of the rand against the US dollar, whilst the US dollar has been falling itself, which is very strange, very unusual. There's something going on. I don't know what it is, but I bet it's behind the scenes, and it's got to do with international trade deals. And, well, we know what goes on. All right, I think I'll just leave it at that. Anyway, we're trying along here because I think the South African rand must weaken, and I want to ride this back up to $20. That could be a 10% trade, and I'm in there at around about 18 and some change. And my target is $20. US 10 years moving down, and we didn't take out the tariff whipsaw top, so that's looking okay. And that's pushing up TLT in pre-market. We're all the way back up to, excuse me for a second, it's Harley sniffing at the door. We're all the way back up to 86, 87, and you can see how we've turned around here on the 10-year yield. So yeah, I'm still long on treasuries. Not my best trade by any means. Now, going across to softs and grains, sugar. Now, again, I covered all of this morning. I want to talk about this. I don't really want to cover all of this right now because I mentioned all of these, and these are not very active trades. They're just trades that I'm in quite often, but they're not fast moving. But I wanted to talk about this one because I know some people got trapped here, and I want to explain to you why it's so important that you should hedge your position, particularly in cocoa, which you know can move by these astronomical amounts. We know we've got a hedged, cornered market. We know that we're at extreme levels. We know that anything can happen. So if you did get short here at the sensible and reasonable level, we were short from the top. And we had to hedge a couple of times with these bounces and the jiggling around, but we got out at the bottom at some point. We took some out at this line that we're at now. We got out at the bottom as well. So we took a good profit on that, but we then sold again when we got back to this horizontal line, and it's the right place to sell, even though it's in the middle of the channel. I didn't think we'd get to the top of the channel. I'm thinking it's generally got to come down at some point, but we did move back up to the top of the channel. We're right there now. And at some point today, I'm hoping I'll be able to take off the long side of this hedge and profit on the move from 9,600 up to 11,000 on this long trade, whilst holding the short position open at a loss. The loss on that short trade will be growing as we move higher, and the gains on the long trade will be growing as well, offsetting the losses on the short trade, keeping us just slightly above break even throughout this whole process. A much better situation to be in than if you got long, if you got short right here and held on to that, looking to add, looking to add, looking to add. What's to say that this won't go back up to the high at 13,800? What's to say we won't get higher, up to 14,000, 15,000? There's nothing to say that we can't or won't do that. The fact that we're at this level where we are at the moment is astronomical as it is. Look where we've come from, 2,000, 3,000, 4,000, and we're now trading in the tens. So that was the right thing to do, to either exit, take a loss, use a stop loss, or hedge your position, and then look to resell into the pink block. We're doing exactly the same, except rather than closing that short position, I'm using the hedge to offset that risk, and I'll be exiting the hedge for a profit and selling an additional tranche there at the top when we turn around, if we turn around. And then we'll have a short from up there, and we'll have a short from down there, and our average price or average position will be somewhere slap bang in the middle. And that's the way I'm playing cocoa. We had a good profit on that trade, but it is very dangerous, very messy. And if you're trading the futures contracts, you'll know that those contracts are large. They're huge, big contracts. And if you're trading the futures like I do, you've got to be prepared to be trading significant size, and you've got to have enough funds in your account. If you can't do that, rather trade the ETFs. Most brokers offer a cocoa ETF. Right, we're still short on coffee. That's going all right, looking good. I'll get to your questions very, very shortly. We've got about, I got a bug in my eye. An insect just flew into my eye. We've got about 7 minutes left, so we'll get on to some of the other things right now. But I really just want to cover coffee and cocoa here. So if you remember, we got short on coffee. We took profit over there. We got short again there. We moved up to there. We actually hedged that. We took profit on the long side of the hedge. We shorted again there, and we got an average price of around about there, something like that. That's the way we played it, generally, roughly speaking. I can't promise that this is precisely the way it worked out, but very close to what we did. We're now short from there and there. Both of these profits are in position. My target, both of these positions are in profit. My target is the top of the channel again, like we did last time, then down to this purple line, bit of a ledge there, horizontal ledge, and then down to the bottom of the channel. And then if we can get through there, then much, much lower down, probably down into 250, 240, 220, maybe even 200. So those are the two plays on the trickiest of these commodities. That's coffee and cocoa. And we remain long on corn, long on cotton, long on wheat, long on soya. Although we're not long on soya. We took profit at the top there on soya. We're out of soya. And then orange juice, we don't have any positions either. We got out at the bottom. We were short, got out there. We're looking to short again, probably higher up. Not too sure about orange juice, but we got a decent profit on that move down. Okay, so that's it, folks. Now let's get to some of the questions. There are a lot. Wow. Okay, let me try and get through them. Damn, I should have just stuck on the questions, guys, rather than rambling on. But there we go. A new follower, Joachim. Since a few days, seeing a lot of the same visions, but also learning from you. Great. Greetings from Holland. Lovely to see you. I used to work for a bank in Holland, Joachim, in Amsterdam, as a trader. Ole, greetings from Germany. Nice to see you, mate. Sasa, are your shorts on indices aiming for a pullback or for a devil's basement? I think the latter, Sasa. Until proven otherwise, I'm now bearish on the indices, and I think we'll make new recent lows. We'll get down below the Liberation Day lows. That's my current case. I'm willing to change my mind at any time. And but on the indices, it will only be if we make new all-time highs. And that's where we are. We've broken above the 78.6, last chance for Fibonacci. And so if we get up to and break and exceed the recent all-time highs, then my view will start to change. I'm also allowing for a spike up above the all-time high and then a move down. Generally, I think along with people like Michael Berry, who's apparently just gone short across the board in huge numbers. So I'm in that boat. Now, I've got a lot of feedback on Twitter about, well, are you one of those lunatic bears who thinks that the market's going to go down? Implying that I'm an idiot if I think the market is potentially a bear market. And I say potentially because I don't know, but I think potentially this is a bear market. Until we make new all-time highs, this is what the market does. We pulled back to the 78.6%, slightly above, and the market will often turn around at this sort of level. Sometimes it will make a double top. Sometimes it will exceed the high and move up slightly higher. But yes, I'm on the yeah. How did we get to that? All right. Oh, there we go. I keep on losing it. Yeah. So devil's basement, I think, Sasa is my opinion, but I'm willing to change my mind at any point if we break to new all-time highs on the indices, either of them or any of them. The dollar is weak. Historically, that's bullish for crude, but I wonder if that's different now. That's Brian from. Yeah. So the dollar index, the dollar in general, and we can look at the dollar index, or you could use any other fiat currency against the dollar, let's say the euro, whatever, pound, Canadian dollar, if you want to look at more of the Australian dollar, more of the energy plays. But generally, the US dollar, if the dollar gets stronger, the price of natural gas and crude oil will come down and vice versa. But not always. I mean, it's not a perfect correlation. And sometimes these correlations go out, and they can go out for a very long time, for prolonged periods, weeks, months, and years even. So first TP level for S&P and NASDAQ shorts. All right, so let's look at some targets here. So NASDAQ, really, this is so simple at the moment because I haven't really given it a huge amount of thought. But first of all, the 200-period moving average, the breakout level, and the gap. That's obviously the first port of call. That's the breakout. I mean, everything's there, confluenced in that area. Then there's another gap down here. That's around about the 78.6% Fibonacci. So that gap is at 20,000, big round number. I like that reason as well. The next gap down here is at 18,200, the bottom of the gap. The top of the gap's at 18,500. The top of the higher gap is at 20,400, 20,350. So those are my targets for the NASDAQ. And the S&P, pretty similar, really. We've got another gap down below us on the S&P. But before we get to that gap, we've got the 200 just below us and the breakout area. So, yeah, probably that's the first target, 4,780 on the S&P. Then the bottom of this gap, 4,660. And then further down into these fibs and gaps, next gap's down at about 5,3. So that sort of thing on the S&P. But if this is a bear market and we are in a bear market rally, a dead cat bounce, then those are just starter targets. Same thing on the German 30. And right now at this point, we can just really go on the moving averages, but I'm aiming for the bottom of the channel, the 200-period moving average, the center of the channel. Whenever you've got a channel, the center line becomes support, also where the 100-period moving average is. So that's a clean support level, and so is the bottom of the channel. And there's also a little gap there. There's another gap there. First gap at 22.5. Next gap, channel center at about 21.5 in this region, and then the bottom of the channel. So that's the kind of thing I'm aiming for on those indices. All right, I've covered that for Reba, just covered that. Can you enter in Ethereum? I think you can do what you want, Nikhil. I wouldn't enter in Ethereum. I told you what I think about Ethereum. I think we could get some pullbacks, but if you're not long on Ethereum already, it's not the right time to be buying it at the moment. Could natural gas be turning around? I'm not sure which way you mean, Sasa. Hi, James. How does one survive the manipulation in natural gas by big traders crushing the small guys? It should continue to go lower as there's no real reason or catalyst for it to go higher. Yeah, don't try and predict the markets. Go with the flow. That's all I can say. I don't know what goes on behind the scenes. All sorts of stuff goes on. Some of it's legal, some of it's illegal, some of it's manipulation, some of it's genuine, some of it's international trade, some of it's political, some of it's just pipelines blowing up. Sometimes it's bad weather. Sometimes it's all sorts of things thrown in and no one knows what the hell's going on. And I wouldn't worry about trying to figure out which way it's going to go or why it's going to go. We have a general idea. We look at weather. We look at demand from domestic and industrial demand. We look at the price of oil. We look at all sorts of things. We look at the COT report. But there's no point in trying to say, well, this is manipulation and we're trying to, all the small people are getting wiped out by the big players. It doesn't work like that. The small players provide the liquidity for a lot of the market, but it doesn't mean that they're just pawns to be thrown around by the big guys. It doesn't mean even that the big guys, whoever they are, and whatever you might think they're up to, doesn't mean that they're doing anything at all. The big guys are just generally people like you and me who work in banks, who work in firms, who work as traders, who work in advisory services, like Brian and Bill over at Energy Rogue, and international trade and energy companies. Who knows what's going on? It's such a vast and complicated market that for you to make a statement like, well, it should be going down, but it's going up, so it's manipulation, makes no sense whatsoever. Keep that in mind. I'm not chastising you. I'm just saying this is a common mistake that people make. And even if the market is just completely irrational and doing something absolutely ridiculous, so what? You've got to go with it, right? You can't say, well, it's ridiculous. I'm being manipulated. I'm being damaged and destroyed by the big guys, the whales, the institutions, they are doing it on purpose. I don't think so. No one knows what's going on really most of the time. Even they don't know what's going on. And I know because I've worked in these banks. I've worked in energy trading floors. I know what goes on. And So yeah, it doesn't, just forget about all that story. Trade the price, trade the markets, get a general idea, draw your lines in the sand and trade it accordingly. If you're wrong, hedge or stop your trade out. Not complicated. Okay. No, I don't want to go long on copper, Naruto. It looks weak to me. I could be wrong again, but it looks weak. Your view on natural gas. All right, let's hear. Brian, fantastic. Fundamentals are supportive. Not much growth on production. The keys to watch are power demand and LNG. Each one of those could move natural gas by 0.25 to 0.5. Fantastic. Thank you, Brian. I absolutely agree with you on that. And I think the keys are power demand and LNG. And I think both of those are putting pressure, upward pressure on the price of gas. Power grown by 2% natural gas demand each of the last 2 years. But whispers are solar. Yeah, this is Brian. So Brian, I know that you think that this is going to work, but I don't think so. There's a number of reasons why I'm not the greatest fan of solar power. First of all, inefficiency, cost, environmental issues with making the stuff, the storage into batteries, the production and manufacture of batteries, the materials that go into batteries. And that's not the only list. There are loads of things. But maybe you're right. I don't know. Can renewables take over some of that slack with all that slopping around at the top? The base load's pretty much maxed out. So we got all this moving up and down at the top layer. And you're saying that renewables can, contribute to that. You might be right. I don't know. I think it's unlikely, but that's just an opinion. And you know what opinions are like. All right, I'm going to read through. This is going to be a very long, gosh. All right, let's get through some of these questions. LNG imports, exports, get wrapped up in tariffs. Yeah, so we don't know what the effect of tariffs will be. A Freeport style drop in price. Yeah. Do you think we'll test the 200 MA in gold? That's from player 141. Cool. In gold, 200 SMA. You're talking about the day chart, I suppose. That's down here at 2.7. Let's just have a quick look. That is the 200, right? Yeah. Yeah, I think it's quite likely. In fact, quite possible. As I said earlier. Yeah, Brian, here's a question for you. Do you think $3 or lower in natural gas is possible? Let us know if you're still around, Brian. Junaid, your natural gas analysis was spot on last week. Thanks. Helped me out a lot. No worries, mate. I think fundamental support sits around. Here we go. Brian's answer. Around 325 to 375 as a balancing point between supply and demand. So we could overshoot that. A balancing point, that's a good point. I think 325 is a key area, Brian. Balancing point, as you say. And maybe we'll overshoot that down to $3. I think it's more likely in the case of head and shoulders that we actually go up again to form, to form the right-hand shoulder. It's not actually properly formed. But what I was going to say about head and shoulders patterns in general is that I don't like them very much. They're the least successful technical pattern that you'll find on your charts. And quite often you'll find that I would estimate that 70 to 80% of the time, head and shoulders patterns just don't work out. They get too skewed, they get too long. They're too obviously visible, so everyone's seeing them. Everyone's done just what I've done on my charts, drawn in that head and shoulders, exactly what I've done. There are millions, maybe not millions, probably hundreds of thousands of traders with exactly that same pattern, and most of the time they just don't work out. So yeah, that's just a particular bugbear I have with head and shoulders, but they do have a role, of course. The variables this year could literally add $1 to the upside or the downside from a fundamental. So yeah, so that's interesting, Brian. So a $1 swing depending on LNG and demand, and not only domestic demand, heating and cooling, but industrial demand as well, and also self-built industrial power plants using LNG, like some of the chip companies moving into Texas and Arizona, building their own power plants to fuel their factories, to power their factories. And I imagine that they'll be using natural gas. Should we be looking for short positions on NatGas or wait for a trend change? Well, we're already short from the top, Naruto. The short's now finished. So, I mean, it doesn't mean we can't move down to $3 or below that, but the short trade is now done. We're out, mostly out. And the rest of it we're holding has a 20% profit built into the stop loss. So no matter what happens, this contract we've made a fantastic profit on. And whether we'll get back into this contract or not, the rollover is next week. So whether we'll get into that or not, I don't know. This current contract, I can't trade the forward contracts with my broker. I have to trade the current contract, the front month. So whether I'll get into the front month or not again, I don't know. Probably not. But I'll hold this position until we get down to $3 or we get to 351, one of the two. Either way, I'll be out of the trade for a 20-cent profit or dollar profit, something like that. So that's the difference on this last portion of the last tranche of the trade, because we've already taken quite a lot of profit on this trade. So now it's not good time to be looking to short right now. We're near the bottom. Natural gas trades in a range, folks. When you're trading in a range, sell the highs and buy the lows. Sell the rallies, sell the top of the range, buy the bottom of the range for all the commodities you trade. Basically, that's the fundamental approach. Brian's another reply for you, MBG. Technically, I saw a weak spot. Technically, I show a pretty weak outlook. Fundamentally, I think there's support in the 325, 375 level. Yeah. Oi, hi. I think my wife has just arrived home and Harley knows about it. So if you just give me 1 second, I'll just, yeah. All right. My wife is coming to the rescue to take Harley. All right. Harley crisis averted. Now let's carry on. You're so right. We're talking with AI and data centers. The key variable in profitability for AI and data centers is power costs. They're really concerned for the next 30 years. And the same goes for Bitcoin mining, Brian. Don't forget about that. A lot of Bitcoin miners are turning into self-funding electricity plants by the sounds of it. It seems to be a new thing. So let's see what happens with the Bitcoin miners as well, whether they're going to be upping the natural gas consumption too. Renewables will help, but can't be looked much at as baseload unless battery technology gets a lot better. Absolutely. Thank you, Martin. Appreciate it. Take care, mate. And Viraj, hope you're well. We're both short Qs and the SPY. How do you see the market strength and the breadth right now? And the high 10-year yield affects debt refinancing, lack of liquidity in Q3. We'll have to get to that one later, Viraj. Folks, there's so many more questions. So I'm going to have another live stream on Monday. We'll get to some of these other questions. Please return on Monday. Market's about to open. I've got to go. I've got positions on, and I've got to start managing them and getting to my private group members. Come and join the private group if you want to carry on chatting with me. There's a link below. Come and join us. And we'll be talking about all of these trades that we've just discussed. If you don't want to do that, at least subscribe to the channel, press the like button, and consider joining the channel for $1 a month. And you'll get a lot more than you get from these public videos and things that I do. There's a lot more that we have and are building out in the private section for $1 a month. And at least if you don't want to join my private group, it's a lot more expensive, but at least you'll get a bit more than what you get in public here. And folks, I'm going to have to go now. I do apologize for cutting this short, but we've been here for an hour and my trades are waiting for me to get back to them. So I appreciate you being here. Thank you very, very much. And please come back on Monday for those of you who ask questions towards the end. There are about 20 questions here, I think, maybe 15 or 20 different questions that I'm not able to get to. So come back on Monday and ask the same question. I won't be able to see what the questions were, but ask the same question on Monday and we'll cover those at that point. So thank you very much for being here. Let's get to those markets. It's going to be an exciting day. And maybe it's a free fall Friday, maybe not. Who knows? We'll see as time goes on. It's going to be a good one. I think we're pretty excited about today's trading. And if we do get moving on these indices downward, it could be quite rapid and quite a big day down. If not, we might just carry on creeping upwards, melting upwards. And at some stage, I'll have to hedge my shorts on the S&P, NASDAQ, and the German 30. Have a great trading today, folks. Take care. See you soon.